Good morning, this is Howie, and I'm here to help you win with money. Today is the first day of December, and what is exciting is market is opening strongly up 1%, and last month, November, was one of the best months on record, and I think it was probably the best month on record for the last 20 years, I think. And here's the article. If you go here, it says stock rose Tuesday. And here's what I was looking for. The monthly gain was probably the biggest. Look at that, 11.9% in the month of November. That's normally what you expect in the whole year. So obviously, we can finish the year pretty strong. A lot of investors are excited because it means your 401k plan, your investment accounts are all up. And I want to transition. Before I go on to doing my normal portfolio stuff and trades, there's one thing I want to talk about real quick before we begin. Robinhood traders. We know that Robinhood has done well for the industry, as in it introduced zero cost commissions right here. And it did force the industry to change its practice. And I believe it was this time last year where Charles Schwab, ETrade, and maybe even Fidelity, I don't remember, but all the big ones went to a $0 commission fee structure. So thank you, Robinhood, for that. So what did I want to talk about with Robinhood? Robinhood has a big followers of those who trade on their mobile device, which generally skew towards a younger generation. Maybe anybody under 40 are those who are mostly Robinhood traders. On the older side, people who are 40 and over are generally those who grew up in the age of discount brokerage. Things like ETrade, things like Charles Schwab, where you're paying $6, $7, or $8 per trade. That generation, maybe under age 60, are used to a discount brokerage model. And anyone above 60 or 70, they were, if they were stock investors, they were trading in a day of full brokerage account. Fidelity Investments, Merrill Lynch, they're used to paying much more. And I remember paying over $200-300 per trade when I first started out. So that dates me. But what do I want to talk about with Robinhood? I'm going to show you something real quick. When you look at their products, it's pretty standard. Stock, options, gold, cash, and crypto. That's what they're known for. But what you don't see is, how do I do a retirement account for Robinhood? And if you Google this, you will see that Robinhood is good for retirement. Look what this says. Those who have retirement accounts elsewhere, because Robinhood does not offer retirement accounts. All accounts are subject to capital gains and taxes, okay? So what that means is this. If I want to open a Roth IRA through Robinhood, you cannot. If I want to do a standard IRA through Robinhood, you cannot. Which means there's a lot of people who are trading in their Robinhood accounts, including options traders, who don't even know that they have to pay capital gains taxes every year. Now, in the beginning, let me give you this idea. Those who say, if I'm making $100, why would I care about paying taxes on the $100? So what if the government taxed me 20%? I still have 80. And that's a true statement, regardless. If you're always making money, there's nothing wrong with paying taxes on the money. The goal is then, how do you keep more money in your pocket? So let me give you an analogy. If you got two different runners running a race, one is slim, he can finish a race faster. And then you have another guy who's a little bit overweight. He may finish the race, but at a slower pace. So when you're talking about two different individuals, you're like, hey, so what if I pay taxes, right? You can be the slim guy who pay taxes and still finish the race quicker. And that's true. But that's really a bad analogy. Really, the analogy is, it's someone who's the same person. So if I'm 180 pounds running a race, I can finish the race in, let's say, 20 minutes. But if I'm the same guy, if you throw on 20 pounds extra, I can still finish the race, but maybe 22 minutes into the race. And so that's the way you got to look at if I'm paying taxes or not. So in Robinhood, sure, you can make money and you can trade and you can still make money. After taxes, you still make money. But you would have more money if you did the exact same trades on a different account where you can skirt the taxes or at least defer the tax until retirement. And so some people say, well, what's the big deal? Well, let me explain. If you're 35 years old and you're a Robinhood trader, if I make $1,000 profit this year, I will keep $1,000. And if I do that every year for the next 20 years, that could be $20,000 in profit. The Robinhood trader who's trading and making $1,000 profit most likely will have to pay 20% in taxes of his trading. So only $800 is kept in his pocket. The person who doesn't have to pay taxes now, let's say it's tax deferred, I can actually compound the money that I was given away in taxes, and I can make more money on that money. And if you do that for 20, 30, or 40 years, sure, at the end, sometime down the road when I'm 62 or 65, when you pay your taxes, you can pay this tax once, and so I reap the compounding effect for 20 or 30 years on that money I kept in my pocket for now. If you have a Roth IRA, you pay your taxes up front, then you trade, then you made money. None of your gains are ever taxed ever again. So I just want to say that because there's a lot of Robinhood traders who don't understand this. I used to pay taxes on all my trades, and I'll tell you, it was fun for the first, year or two, until you realize what your other options are, and then you realize it was not so fun when you were doing it. So back to my account. So with that being said, let's just go to my ETrade account. As you can see, my accounts are Roths. I don't worry about my trading. I never put new money in. My account grows based on my trading. I haven't put money in this account in years. So you can grow it just by dividends. I did close some position out. Let me just take a quick look down here. Okay. This one I did. This one was in jeopardy. If you see some of my old videos, I had to move this out. And what I may do is create an iron condor on this. So let's take a quick look at what the odds would be. I would like to open up the Power ETrade. Okay, it finally loaded up. Let's take a quick look at Visa. What I would like to do is create I think that's the right date. So yes. So I already have a 225. The odds are pretty high. You see I'm at risk still. But what I want to do is I want to offset it by creating a trade on the other side. So I want to be a little bit safer on the downside. Even though the markets are hitting new highs, I actually own shares of Visa. I'm okay if Visa keeps on going up, but I am not okay if Visa goes down. So on the downside, I may play something a little bit safer, something like $20-something away. I may play something like a spread on this side here. I'm not going to get a lot of credit here, it looks like. I'm doing that. I'm still trying to fix other stuff. Here's a Bank of America one that I'm trying to roll out and up. I'm going to do that while I'm waiting for the other one, for the Visa. While we were waiting for the other trade, AMC went across. I actually had an open order to roll that out, and I pushed that out and up. And you see why this one dropped. So this order went across. I'm still trying to get the other ones to go across. So real quickly, let's show you how to do it on ETrade. I'm going to do something like this. Let me set this up and then I will show you what I was thinking. So let me show you what I was looking at. A free 95 will put you over here, free 95. The odds are, here you go. So the delta is 6. Roughly a percentage odds is about 9 or 10% chance of happening at a free 95. But at the same time, if you look at the put side, I was using a 315, which puts you here. You see this? The delta is also a 6, but the odds are happening based on the math is 0.6. So the problem with doing that is it's too, the chances of this happening is a little bit too far. And so what you're risking in cash and the reward is really small. So what I may do is just move it up a little bit, not by much, maybe a 7 or 8 or 9 delta, and then move it around here, or 220. So let me try it and see what happens. So I just added that in here. So here's what it looks like compared to the other ones. Now this sheet is not updated. I think I closed some of these already because I think I only have a few of these open. So I'm looking at this one here. I'm moving the upside a little bit further away. It's a little bit more narrow than the others, but that's okay. I'm only doing a single contract on this one, 39 days away. And I changed it so it's a little bit wider. So yes, I am risking more of my cash, but the percentages are, it's still hard to get to, so it makes no sense to keep it a $1 or $2 spread. The problem is normally you should collect 100 or 130 or 140. I think the odds are still really narrow, so I may just end up doing it just to collect a few dollar profit. So I put in the order, just one contract. It's not a lot of money. Again, you make money by time decay. I'm not trying to go for a home run. I'm going for a bunch of singles. When I play my options, I do really low reward, low risk. I'm okay with that. Let's see, did it go across? There you go. That one went across. I think I only got 71, or I think I got 71 for it. So I lowered it. I'm okay with that. Again, I'm not into making, sometimes I'm not trying to hit these really big home runs. I try to do a lot more trades. And if I can make $5, $10, or $20 on each one, I just have to do many of them. And finally, my Visa trade went across, but I had to lower it. On an up day, it's really hard to sell puts that are really far away. So I was okay with taking a smaller premium today. I'm okay with that. So here's the trades. So I'm going to input, not today's trade in the spreadsheet. I'm going to go and fetch some of my old trades from yesterday and pop those into the spreadsheet. So I think I'm done with my trades for right now. Let me look. So let's see what's different. This was rolled up. This one should be okay. I don't think I need to roll this yet unless cannabis remains strong. Nothing I can do here. This is probably downtrending. I'm okay because look, I'm still over $50 away. I don't really care. I'm holding these for the long term. I may need to roll this one up. This one I'm going to eventually roll up. I still have time. And let me show you what happened in my portfolio. So the SPY, you see I have a 24, a 31. I just added this one here because there's only one contract. I don't really care. The twos I do matter. I want to collect more risk, more reward. I want to make sure I don't get assigned or get shares put to you. So this one looked like it's going to be fine. Let's take, this one's going to expire worthless. This one, so this is a trade that went across last. I only collected $26 credit, but I don't think this event will happen. I only did this and then it helped offset some of the loss I had on the Visa trade here. This Visa trade was originally a 210, I think. It was a 210 call. I moved it to 212, and then today I finally moved it again to a 225 because Visa is trading at 212 right now. So the risk is there. So I had to move it. So let me show you my transaction log next. Here you go. I'm going to copy that and then paste. And if I do this right, I can never memorize where I'm pasting it to, but I think it's this column here. Okay. Hang on. I got to copy more. So I don't copy anything that I do today. So in this particular portfolio, you will just copy these here. think it's here. And then I have to clean up all these useless things here. These are not, delete those. And then delete these. So let me clean this up and then I'll resume recording. First thing I do, I put on a filter. Let's fix all these. Fix all these. The negative one will require a purchase. So that's that one there. And then let me fix the ticker symbol. These were CF. And then let me fix that. And I like to say everything looks like it's set properly. Let's do the dollar amounts, align. I fix all of these. You see how I have to manually populate these. And I think everything is set. So I needed one cash curve put. So let's go up here and this will finish out my month. And we will do a refresh. And there you go. So yesterday, it looked like I didn't have a really big day. It just looks that way. I did write Visa. I opened a new Iron Condor. So I collected a lot of premium for there. But doesn't mean I won yet. Remember, anytime when I'm a seller of options, I collect the premiums up front. Doesn't mean I made money yet. But it's good to see it because I monitor it. And that helps. Did I hit refresh? And there you go. That's what it looks like. And it's a decent month. You see that? That brings my episode to an end. Please like and subscribe. I'm one of the few YouTubers that do post my ETrade transaction log into a spreadsheet. I record all of them. As you can see, I'm in the thousands now, 5,000 rows. And then I will continue on next year doing the same thing. You can see my transaction logs. I just copy and paste. I do a pivot. I remove anything that will distort the numbers. I'm only showing my options premium, the win and the losses. And I also show my dividends that I capture. Part of what I do is I do invest for dividends, and that is part of one of my passive strategies. I'm not just trading all the time just for the sake of trading. I'm actually a dividend collector. So I hope you see that Roth IRAs and trading or trading in a retirement account has an advantage. And the advantage can be anywhere from a 15% or 20% advantage. Depending on which tax bracket you're in, some people pay zero taxes even in their trading accounts because they're in a lower income bracket. But for most middle class tax filers, you're going to have to pay 15, 20 or more on your trading. If you're doing frequent trading and you're not holding anything for a year, that can be taxed at your marginal tax rate. So if you're a high income earner, you could be 31% or higher. So take into account your taxes. If you don't see it, you will at tax time. And someone who doesn't trade in a tax deferred account or a retirement account, anybody who trades in those type of accounts have a slight advantage. Because even if you made, let's say, $5,000 for the year, somebody who traded and only made $4,000 but non-taxable, or at least not taxed this year and is tax deferred, they have plenty of years to compound their trading, because that $1,000 that was not taxed, they can use that principal to invest in more investments, and over time, right, if you do this for 20 years, that adds up. So hopefully you got that from this video. Please like, subscribe, help your friends see it. If they don't understand the concept, they can watch the video. There's other videos to watch to learn this. I teach it all the time. You got to be aware of what's happening from a tax point of view. With that being said, let's do this together. Let's do this $1 at a time and have a profitable day.